You already knowing what it is. Come on down and get them Hollywood trades. I just wanted to show uh I was doing some marking up on the hourly on NASDAQ, and I realized that I never recorded a video of how I find algorithmic support and resistance levels. And this is it right here. Like, I was looking around at the new week opening gap range, and I realized that there was a breaker body right here, right? So even if you get rid of this markup, your breaker body is actually sent us directly into the rebalance level. Boom! All of this happened perfectly. Unfortunately, there was no entry for the whole 500 pips we just missed, but point still stands. So got the gap, got the midline of the gap marked right there, dash white, and then I have the high of the lowest candle mark. That's always one of the most important points in the bar method, candle by candle price action. And so when I see levels like this, where it's the 50% and the high of this candle right near each other, I know something is strange. I look to the right, I confirm we have a high volume node. When stuff just starts adding up, it just starts adding up. So what I always do, and this is what I do, there's not anything made up. There's not anything it's actually not anything strange. This is just a normal occurrence. And so when you start getting levels like this, right, you're like, hold on, wait, something ain't right. I get here and I'm like, nothing there. Let's go. And I'm certain that I'm gonna get this level. It's 24,270 on this capital.com. And so let's go and let's see if we can. It looks like something might have happened in here. And so I find this, and this is what made me want to record this video, because the level is 24,270. So what I'm gonna do is, I could use the magnet, but when you get to 24,270.4, actually. So I'm gonna pull that right up in here. And what do you have here? Wow, isn't that interesting? Algo support and resistance. I'll usually keep these levels on everything up to the 4 hour. So I'll do current interval and below. So when I don't know why they did that. So pretty much within this level, you can see before we even got to today's candle or Friday's lowest candle, boom, the close or the open on this body. Close to these levels as well, but not exact, because when it's the algo SR, it'll, of course, you can find levels that are always doing exact things at certain points, right? Boom, you tap it here, the low of this candle, the low of this candle. You come in here, it's still messing with it here, it's messing with it, boom, the high of this candle. And I think that was pretty much it, and I'm pretty sure a lot of times you can even go back and all depending on how much, but these levels spawn like this. This was what the September was that September 15th is when this level first started playing. It was this order block. This was an important block, and I'm pretty sure if I push this whole block over, right, if I outline this whole block, but I like to see those exact levels, because when you find those levels, you can always find strange things happening at those levels when you get near them. So I'll keep this level here into the future. as we proceed. And of course, I'll lose this NWOG markup. Some people do bring NWOGs over to the right. You can do some pretty decent work if you stack arrays like to your right hand side. You can really do some pretty crazy things. But as you guys know, for me, once you're using that candle by candle, it really don't matter because the candles are going to give you the new iteration of the price itself anyway. The new candle is going to have the highest volume in that price level. So even though this low, right? This is actually something that I I gripe with, but I had this level like this because as I'm going candle by candle, I'm already marking the high of this candle. Of course, the low of this candle is important, but the low of this candle is more important out of these two lows. So when I come down, I'm expecting it to hit this level as well. When I come down here, there's an imbalance here. I didn't even mark the imbalance because in these candles, the most important thing is the low of this candle and the rest of this gap. So I really want to see how it's going to treat this level after rebalancing this and how it's going to treat this candle. That'll tell us, I want to see it actually waterfall into this gap and give us that really good vibe back into the highs. But right now we're going candle by candle, and that high is telling us what we should be thinking about next. But I ultimately ended up extending it to the left right there because it's a pretty much a break and retest right there. That bar method, break and retest or rejection. So we broke this level. That was the retest of that level, right? And it was actually the test of this level as well, this exchange level. So I never marked these exchange points. I used to, but it's too much of a markup sometimes. I think understanding it as close to the edge of where price is printing is always going to be your beneficiary when it comes to ideas. So pretty much with that being said, we do have a new algo SR. Let me go ahead and get rid of that. And that's pretty much that. Yeah, it's pretty much that. And that's what we're looking at going into the week for NASDAQ. We did have the big drop and we did measure this range as a Fibonacci, but as I say, I would much rather be tuned into the candle levels more than anything else. Of course, percentage retracements and extensions matter. Of course, an all-time high, this needs to be measured and extended upward. That's what I do need to do, but I'll probably do that on the 4-hour chart. Um, and this actually does feed into the rest of the video as well because this is how you find algorithmic levels as well. Like if you're extending into all-time highs or no man's land, you would just, right, usually upon this drop, right, you drop, and then if you close above this 23%, usually you can reach that deviation. That is if you're still trending, right? So if you are still trending, this would be the easy deviation. The 2 times deviation would be the next level up above this, but this should preferably always be like a no-brainer for algorithmic levels. The computers, I'm not I'm not making this. I'm not making this level up. This level is just a nice medium ground level if you did measure this to this and then go up here. So the computers are doing this. They're monitoring these type of levels in real time. So as this is stretching, they pin right. Like shouldn't even have to explain it. It should just be a no-brainer that that's what they do, right? They pin this here, and then as it's stretching, their deviations go higher and higher and higher. It stops. They close above this level. Boom. You should easily be able to get here. So you do have further deviations as well. This is what I would call max deviation of this very pullback. Of course, there's going to be plenty of sweeps and FPGs on the way there, so it all starts changing. But this would be the base elevation of this move, 28,852, and this is why when price starts getting wider and wider, right? So when you start talking about algorithmic levels, when price starts getting wider and wider like this, the retracements and the pullbacks create higher deviations. It's a rigged game. Like appreciated assets are a rigged game in this manner, in this very comprehension of just algorithmic expansion, um, using mathematics to project goals into the future. Yeah, knowing that it's factual, that this is an appreciating asset over week, over month, and so that's just how it works. So I hope you guys enjoyed that. We have much greater things coming up. Also, weekly lows are algorithmic levels. Most basic of things that you could say about algorithmic levels. But all right, hope you guys enjoyed that. Uh, we'll see you next time, and go ahead and share this with someone who. Didn't mean to do that. Share this one with someone who needs to learn a little bit about a little something.